Let us go to the last section, originate to distribute model. Okay, now I'm giving you one scenario of securitization to help you understand what exactly the originate to distribute model would look like. The entire thing will come in detail in your mortgage backed security topic. Okay, now look at this example. Suppose I want to give you an example of originate to distribute model. We're looking into asset which is specific to your home loan. I'm taking an example of a home loan. So normally what happened is that a homeowner would go to an originator, somebody who is giving out a loan, okay, and would take a mortgage. Okay, you'll fill up the form, we'll give the documents and all of it, and the originator would issue a home loan, and the homeowner buys the home and he starts staying in that. Okay, now if the originator, this, if you hold till here, this process is called as originate to hold, because you are issuing a loan to keep it in your book. But if you are following a securitization process, then ideally what, this is just an example of securitization. Originator, what he will do is he will pool so many of these home loans, suppose thousands and thousands of loans, and he will create a pool and go to the government sponsored entity. Now government sponsored entity are government bodies basically, or companies where there is a stake of the government, which is being created to help the securitization market. They give insurance also on these kind of products. So they will take the mortgage pool, and the government sponsored entity will create an MBS, mortgage backed security, on that entire pool, and on this pool will be sold. Okay, but before selling, they will do a credit rating of this pool, and they can create different tranches within the pool, but they will use this pool originator, and they will sell it to an investment bank or somebody else, okay, a dealer or an arranger, and the dealer and arranger is going to give back the money to the originator. Now once the originator gets the money, he can issue new loans in the entire process. Okay, now the dealer and the arranger, he is going to get this MBS product. He will try to sell it to the investors. Now investor can be your uh, asset managers, or basically fund managers, pension fund managers, insurance companies, okay, who directly have the money from the retail customers. Okay, and they pay the money for this product. Okay, now how would an investor get money back? Okay, what is the in return for them? So whenever a homeowner is paying an EMI, that EMI has a principal and the interest component, and that goes to a servicer who is engaged in between, and that servicer will pass on the money to the government sponsored entity, and through that it will pass on to the investor. This is an example of the entire originate to distribute model. Now why this name is there? Because the originator has created a loan because he wanted to distribute to somebody else through the securitization process. Is everybody clear on the example that I've shown you? Give me a quick confirmation, guys. There can be very many variations of this. Just I've given you a very simple and structured thing. So what is happening? A homeowner is basically issuing taking a home a mortgage from the originator. Originator is creating so many pools of home loans, going into the government sponsored entity. Government sponsored entity is taking that pool, creating a structured product, which is mortgage backed security, MBS, okay, and giving it back to the originator. Originator would take it to the rating agency, would get the rating for the product, and then it will try to sell it in the market to a dealer. Okay, now dealer will purchase it because he knows that he can sell it back to the investor or an asset manager in future. Okay, now once the investor and asset manager has received this structured product, okay, how exactly they will get the money from this? The homeowners will pay interest and the principal as a part of the EMI that will go to the servicer. Now servicer is in between to manage the back end activity. Okay, and on the basis of this, he will pass on that interest component towards the asset manager. All good, guys? Now what is the benefit of this entire process, and what is the problem with this entire process? Okay, what is the benefit? It increases liquidity. Now since the originator is going to have a huge amount of money available again because of this entire process, okay, now in this case the liquidity increases in the market. Now more and more people will be able to get home loans. Okay, that is one part. Instead of home loan, you can use other asset also, which is going to give you income. For example, student loan, credit card loan, all of this can be used to create a structured product. Now for the banks who are issuing loans, okay, it frees up capital, because if I'm going to originate to hold, that loan will remain on my book. If I do a securitization, I create a originate to distribute model, I free up the capital, I have more money again available to do other things. Okay, so this is the benefit that we see. But what is the risk of this entire process? Reduced lending standard. Now, how come that is going to be impacting this entire process? Now, if a bank knows the loan that I'm going to originate, the entire loan will be passed on or passed on to the next person, then he would try to give loan to anybody. Okay, because he has to only make sure that the loan is passed on to the next person, because it is not going to stay on its own book. Okay, so this will create a lot of conflict of interest in the entire chain, because ultimately it's the investor or the asset manager who's going to hold that asset. Okay, so all the risk will fall on his head. Okay, so this is the risk that we see for the entire OTT model. Okay, let us quickly go towards the book and read this section. Read the first paragraph. Read the first paragraph. It is also giving you the names of the government sponsored entity, Guinea Mac, Finny Mac. Read this entire paragraph. I hope everybody has been able to read that section. Let us go towards this part, the benefit and the riskiness of the part. I've given you the bifurcation into 2 paragraphs. Read this section and confirm back to me that are we good on this entire content.